Welcome to our exploration of the rise of electronic payments. In recent years, the way we handle money has undergone a dramatic transformation. Cash is no longer king, and digital transactions are becoming the new norm. From online shopping to paying bills with a tap, electronic payments are reshaping our financial landscape. In this video, we'll dive into how electronic payments emerged, why they're so popular, and what this means for our daily lives. Let's begin by understanding what electronic payments are and how they differ from traditional cash transactions. Electronic payments, often called e-payments, refer to any financial transaction that takes place digitally without the use of physical cash. This includes credit and debit card payments, mobile wallets, online banking, and even cryptocurrencies. The convenience and speed of these methods have made them increasingly popular worldwide. Unlike traditional payments, e-payments can be made anytime, anywhere, as long as you have an internet connection. This flexibility is one of the main reasons why so many people are making the switch. Journey from cash to electronic payments began with the introduction of credit and debit cards. These plastic cards allowed people to make purchases without carrying cash, offering both security and convenience. Over time, card payments became widely accepted, paving the way for more advanced electronic payment methods. Today, cards remain a crucial part of the digital payment ecosystem, often serving as the bridge between traditional banking and new digital solutions. With the rise of the internet, electronic payments took a giant leap forward. Online shopping became possible, and people could buy goods and services from anywhere in the world. Payment gateways and secure online transactions made it safe to enter your card details on websites. This revolutionized commerce, making it easier for businesses to reach customers and for consumers to access a wider range of products. Next big step in electronic payments was the introduction of mobile wallets. Apps like Apple Pay, Google Pay, and others allow users to store their card information securely on their smartphones. With just a tap or a scan, payments can be made instantly at stores, restaurants, and even public transport. Mobile wallets have made transactions faster and more convenient, especially for people on the go. Contactless payments have become increasingly popular, especially in the wake of global health concerns. Using technologies like NFC, users can simply wave their card or phone near a payment terminal to complete a transaction. This touch-free method is not only hygienic but also incredibly fast, reducing wait times at checkout counters and making everyday purchases seamless. QR code payments have taken off in many parts of the world, especially in Asia. By scanning a QR code with a mobile app, users can pay for goods and services instantly. This method is simple, secure, and doesn't require any special hardware for merchants, making it accessible to small businesses and street vendors alike. Peer-to-peer payment apps like Venmo, PayPal, and Zelle have made it easy to send money to friends and family. Whether splitting a bill or paying rent, these apps allow for instant transfers between individuals. The convenience of peer-to-peer payments has made them a staple in everyday financial interactions, especially among younger generations. E-commerce has grown hand in hand with electronic payments. Online stores rely on secure payment systems to process orders from customers around the globe. The ability to pay digitally has made shopping more accessible and convenient, fueling the growth of online marketplaces and changing the way we buy everything from clothes to groceries. Security is a top priority in electronic payments. Advanced encryption, two-factor authentication, and biometric verification help protect users from fraud and theft. As digital transactions increase, so do the measures to keep our money safe. Understanding these security features can help users feel more confident when making electronic payments. Banks play a crucial role in the electronic payment ecosystem. They provide the infrastructure for processing transactions, issue cards, and develop their own digital payment solutions. Many banks now offer mobile apps that allow customers to transfer money, pay bills, and manage accounts entirely online, further driving the shift toward digital finance. Financial technology, or fintech, companies are at the forefront of electronic payment innovation. Startups are developing new ways to transfer money, invest, and even borrow, all through digital platforms. These innovations are making financial services more accessible and efficient, challenging traditional banking models and offering consumers more choices. Cryptocurrencies like Bitcoin and Ethereum have introduced a new form of electronic payment. These digital currencies operate independently of traditional banks and can be used for online purchases, investments, and even peer-to-peer transfers. While still not mainstream, cryptocurrencies are gaining acceptance and could play a larger role in the future of payments. Governments and regulators are adapting to the rise of electronic payments by updating laws and guidelines. Their goal is to ensure that digital transactions are safe, transparent, and accessible to all. Regulation helps build trust in electronic payments and encourages wider adoption by both consumers and businesses. Electronic payments are being adopted at different rates around the world. In some countries, cash is still widely used, while others have almost entirely switched to digital payments. Factors like internet access, smartphone penetration, and local regulations all influence how quickly electronic payments spread. For consumers, electronic payments offer convenience, speed, and security. No more carrying cash or worrying about exact change. Digital payments can be tracked easily, helping with budgeting and financial planning. These benefits make electronic payments an attractive option for people of all ages. Businesses also benefit from electronic payments. Digital transactions are faster to process, reduce the risk of theft, and make it easier to manage sales records. Accepting electronic payments can attract more customers, especially those who prefer cashless options. This shift is helping businesses grow and operate more efficiently. Despite the many advantages, there are still challenges to overcome. Not everyone has access to the internet or smartphones, and some people are concerned about privacy and security. Businesses may face costs when upgrading their systems to accept electronic payments. Addressing these barriers is key to ensuring everyone can benefit from digital finance. To make electronic payments accessible to all, governments and organizations are working on digital inclusion initiatives. These efforts aim to provide affordable internet, smartphones, and education about digital finance. By bridging the digital divide, more people can participate in the benefits of electronic payments. Looking ahead, electronic payments are set to become even more advanced. Innovations like biometric authentication, AI-powered fraud detection, and seamless cross-border payments are on the horizon. As technology evolves, electronic payments will continue to shape the way we live, work, and interact with money. The rise of electronic payments is having a profound impact on society. It's changing how we shop, travel, and even donate to charity. Digital payments make it easier to support causes, access services, and participate in the global economy. This shift is creating new opportunities and challenges for individuals and communities alike. Electronic payments can also have environmental benefits. By reducing the need for paper receipts, cash transportation, and physical infrastructure, digital transactions can help lower our carbon footprint. However, it's important to consider the energy use of data centers and devices and strive for sustainable solutions. Electronic payment ecosystem is made up of many players including banks, fintech companies, payment processors, and technology providers. Each plays a role in ensuring transactions are fast, secure, and reliable. Collaboration among these stakeholders is essential for the continued growth and innovation of digital payments. Payment processors act as intermediaries between merchants, banks, and customers. They handle the technical aspects of transactions, ensuring that money moves quickly and securely from one account to another. Without payment processors, the convenience and speed of electronic payments would not be possible. There are many different types of electronic payment methods available today. These include credit and debit cards, mobile wallets, online banking, QR codes, and cryptocurrencies. Each method offers unique features and benefits, allowing users to choose the option that best fits their needs. One advantage of electronic payments is the ability to generate digital receipts and keep accurate records. This makes it easier for both consumers and businesses to track spending, manage budgets, and prepare for taxes. Digital records are also more environmentally friendly than paper receipts. Electronic payments are increasingly being integrated with other digital services, such as ride-sharing, food delivery, and subscription platforms. This seamless integration makes it easier for users to pay for a variety of services without ever reaching for their wallet, further embedding digital payments into our daily routines. Many electronic payment platforms offer rewards, cashback, or discounts to encourage usage. These incentives make digital payments even more attractive, providing extra value for consumers. Loyalty programs and special offers are helping to drive the adoption of electronic payments worldwide. As electronic payments become more common, so do the risks of fraud and cybercrime. Payment providers are constantly developing new tools to detect and prevent fraudulent activity, such as real-time monitoring and machine learning algorithms. Staying informed about these risks helps users protect themselves and their finances. In conclusion, the rise of electronic payments is transforming the way we handle money. From convenience and security to new opportunities and challenges, digital payments are here to stay. As technology continues to evolve, embracing electronic payments will help us navigate the future of finance with confidence and ease.